Welcome back. Futures this morning are mixed. Take a look. The Dow Industrial is up about 10 points, but the S&P and the Nasdaq down. Really fractional moves across the board. All three major indices pulling back at the close yesterday after weeks of record highs as investors are awaiting the Federal Reserve's rate decision at 2 p.m. Eastern today. Jay Powell will speak a half an hour later, and we will get his commentary on the economy. The Fed widely expected to cut rates by a quarter point today. Traders are pricing in 3 cuts by the end of the year. Lisa Cook is remaining on the Fed board for now after a federal appeals court blocked the president from immediately firing her. But Stephen Moran, now part of those discussions on the board after being confirmed by the Senate. President Trump said that he thinks he'll have a big influence on the decision today.
President this time season firing commission. He is now on the Fed. Most of you know him. He's very talented. He'll have a big influence on this. When too late getting his rates down, I guess. Who knows? You never know with too late, but he's done a lousy job. The rate should be much lower, much lower.
Do you believe the Federal Reserve is an independent body?
Oh, it should be, but I think they should listen to smart people like me. If you look, all the economists got it wrong. I got it right along with one other people out of 100. So they should listen to people that are smart.
Joining me now is the former Treasury Undersecretary and former president of the World Bank, David Malpass. David, good to see you.
Hi, Maria.
Thanks so much for being here. What is your assessment? What are you expecting?
I think they'll cut by 25. That's the path of least resistance. And I think it is too late. You know, I did the Wall Street Journal article in early June saying they should cut in June. And then there weren't even any dissents. And then they didn't cut in July. So if they cut 25 now, they're 3 months too late. Now, what's the consequence of that? The public all over the country has small businesses that can't get funding and mortgage rates that are too high. So even if you do 25 now, it's too late. The Fed's trying to make up for that by saying, well, we'll do 2 more this year. But the problem is the economy moves all the time. And so it's been weakening during the summer because the rates are too high.
What are the odds that the Fed cuts rates and the rates go down across the board? Because there is some thinking that, look, just because short-term rates go down doesn't necessarily mean that you're going to see a cut, for example, in mortgage rates. And you look at what's going on in the market. Oftentimes, market rates go up.
That's right, and that is a risk, and that gets to the communication. Why is the Fed cutting? And so if they say they're cutting because it's a political issue, that's not going to help on the mortgage rates. I think there clearly is a model where the United States of America should not be paying as much as it is for the debt rollovers on the national debt. That the reason for that is people are worried about the dollar. If the Fed has all these rules that lead them into the wrong decision. So you aren't optimizing the economy from the Fed's standpoint. In fact, I think the Fed often does damage. They allow inflation to creep up and don't do anything. It was very frustrating in the Biden administration that they were having such a giant spending blowout, and the Fed didn't say anything.
No. They didn't say anything. You're absolutely right. And that's it. So, I mean, we talk about the Federal Reserve being political. Didn't Jay Powell already breach that? Didn't he already make the Federal Reserve political by doing just that, not saying anything with all the spending, cutting interest rates up before a presidential election, getting into office and all of a sudden coming up with all these rules on DEI and climate change?
That's right. That was very political. I had to be in all the international meetings, and the Fed was just as political as the Europeans. And so we're left in this where the U.S. needs to find models at the central bank that work better for the economy. Very fortunately, Treasury Secretary Scott Bessent laid this out in the Wall Street Journal a week ago and in a longer article in International Economy, a magazine that I've written in, and he did an excellent job in pointing to some specific criticisms of the Fed. One major one was that QE, quantitative easing, that Wall Street has been cheering for years, for a decade, since 2010. He pointed out that it didn't work. The economists were wrong on how it was supposed to work, and it ended up causing income inequality, meaning it helped the rich, it didn't raise the median income. So for President Trump, I think there's this giant golden opportunity for him to help the Fed change the model. I liked how he phrased that. It's independent,
right,
but it can't keep making all these these mistakes.
Good point. President Trump, meanwhile, signed an executive order yesterday extending the TikTok deadline for a fourth time after a framework deal was reached between the U.S. and China in Madrid. Chinese platform ByteDance now has until December 16th to divest U.S. operations. The Journal is reporting that TikTok's U.S. business would be controlled by an investor consortium, including Oracle, Silver Lake, and Andreessen Horowitz. U.S. investors would hold roughly 80% in the business, while Chinese shareholders own the rest. Treasury Secretary Scott Bessent foreseeing a broader trade deal with Beijing by November. I spoke with U.S. Trade Representative Jamieson Greer yesterday on this program. Here's what he said. Watch.
We believe that President Trump has, in fact, resolved this issue, balancing the national security needs of the United States with the economic realities of having TikTok operating in the United States of America.
What would a good trade deal with China look like, Ambassador?
Something where trade is more balanced and where we're trading in goods that are, frankly, non-sensitive. We want to be able to trade with China, but we want to do it in a way that's healthy and good for our economy. We can't have all these huge amounts of imports flooding our country, being dumped onto our market, undermining our workers, undermining our manufacturers. We need to be able to export to them. We have to provide market access. And for many years, that's not what the Chinese have wanted. So it's not an easy thing to achieve.
And it hasn't been easy dealing with China, David. What's your take on this situation with China, which continually undermines the U.S.?
There's many points that are in contention. One is intellectual property and how they do business. So they're not giving a level playing field to the U.S. in particular. And it comes down to finding a business in the U.S., seeing what the value is, and then taking that to China. And so this has been rapacious of China. That means they are aggressively taking away business through industrial policy. And so the U.S. needs a response to that. They're getting that. I'm glad to see these deals making progress, but it's deep in China's economy of flooding the market so that the prices go down and then your business goes under.
Well, look, I mean, I'm all for free trade and of course, doing business with allies. But I'd like to know what corporate America is expecting in terms of having their businesses in China. I mean, rob, replicate, replace is the modus operandi for China. John Ratcliffe told me that so many years ago, and that's what Chinese companies try to do to American companies. So isn't it corporate America that we need to convince to get their supply chains out of China, to stop, selling to China while undermining the U.S.?
Yes, so that's part of the dialogue, and I'm sure President Trump is doing that, of making the point that the corporations that bring their products here and manufacture them and learn the processes to do it here will find a ready market and support in the U.S. So that's part of it. I think also there's some opportunity for U.S. businesses to look selectively. If you start and let's try to get 100 factories that are now stuck in China, they can't get out because China puts on barriers to exit. Help them get out of China, get manufacturing in the U.S. So start with a group, and then it expands because you get the expertise in the U.S. back.
By the way, before you go, real quick, David, you're expecting a second reconciliation package from the Republicans in the fourth quarter. Do you expect that is going to include lower taxes?
I hope so. The reconciliation bill is important because Republicans can do it. So it's a huge opportunity here to have a second one. And I think a capital gains tax cut would be very good for the economy, and it would bring in revenue. People would unlock positions that they haven't. People don't want to sell their position because the capital gains rate is too high. That includes houses, and so it's causing illiquidity in the markets.
Well, I have to say that would be a huge boon for the stock market as well.
It would.
Between lower interest rates and a cut in capital gains, huge for the market.
And small businesses.
And for sure, small businesses. And that's the point of the market reaction. David, great to see you.
Nice
Thank you so
to see
much.
you.
David
Thanks.
Malpass joining us. We'll be right back. Stay with us.